Monday, May 16th, 2022, Maneco 64, home of alternative economics and contrarian views. Today we're going to look at the ruble. A lot of you have asked me to quote the ruble when I do my market report towards the end of the videos, but I want to look at it more in terms of what the long-term move in the ruble means for the whole fiat currency system, our debt-based system that has mushroomed into a huge debt bubble since the early 80s. So yeah, we're going to look at why the ruble is pointing to a major move away from financialization, from fiat currency tyranny, if you want to call it that, from pushing people into more and more debt and spending. Yes, they're trying to push people into owning nothing, right? And being happy, so to speak. So I'm going to put my point forward that this is what it's showing. And before I start, though, I'd like to thank again everyone for their interest in the channel. If you're new to the channel, think about subscribing. Think about hitting the little notification bell to be notified of all my new videos. I make I make a video every day, and I do a Sunday live stream, 9 p.m. London. And sometimes I even do more than one video. I interview, in my opinion, what I think are some interesting guests once in a while. The purpose of my channel is not to just do interviews all the time. I like to talk about what I think as well. So, Russian ruble, yes. The most important thing, in my opinion, about the Russian ruble and the Russian economy is that it's one based on hard assets. It's based on a small amount of debt proportionately compared to the West and even China. Even though Russia and China are allied right now, I think this alliance is more for convenience. It's two powers trying to fight a bigger power, so they've joined together. But I think they're strange bedfellows, the Russians and the Chinese. Well, you've got the Russians on one side. They've gone back to family values. They've gone back to Orthodox Christianity after the fall of the Soviet Union. And on the other hand, you've got like a communist, atheist, authoritarian regime. So they are strange bedfellows. And I think the Chinese, they follow the Western fiat Ponzi scheme route in the last 30 years or so. You just have to look at the crises they've had as well. The fact that they were heavily invested in mortgage-backed securities in 2008 in the US. You look at all the leverage in their real estate market. I think Russia is completely different. Am I saying the ruble is going to be the major reserve currency? No, I think we're going to have a multipolar world in terms of reserve currency. Maybe we're not going to go back to the old historical, let's say, timeline that we've seen in reserve currencies, where you had, let's say, the Portuguese currency being a major reserve currency from around late 1400s to the late 1500s, and then the Spanish, then the Dutch, French, and so on, and sterling. Maybe we're going to go to a more balanced world, but there will be, of course, something that will have to, an asset or assets that will have to underpin these currencies. And I think gold will be a big part of it. Commodities will be a big part of it. But it's not going to be debt. I think the debt, how can I say, the golden period for debt is finished. I think it started in early 1980s when interest rates topped in the US. The 10-year yield topped just above 15%. It's been going down ever since, but now it's shifting. It's going to be a long-term shift. It's not going to be overnight, but I think, yes, it's all moving away to a world, a more sober world. And am I saying that the Russians are planning this? No, it's just the way it's happening. Am I defending Russia in terms of what's going on with the Ukraine? No, I'm just looking at the facts and the data and the numbers and the charts. So that's why I think excuse me, the financial markets, the stock market, the bond market, and even commodities to some extent, we're going through, that's why I think we're going through such a choppy and difficult period for investors, and it's going to continue to be, especially if you are in the paper game. And by paper, I mean the stock market and bonds. And I think a lot of people are going to stay there because they believe in that. They've been inculcated for a couple of generations that you need to hold stocks and bonds because they've done well. And they might still not do badly, but I think the hard assets, commodities, gold and silver, they're gonna not maybe even take the reign, but they're gonna become a lot more important. And they've been so insignificant in terms of the amount that investors have parked in that sector. And yes, I still believe that the Dow Gold ratio will be an indicator of where things are going. Eventually, we're gonna go down to 1-to-1. Will there be another credit expansion after that? Maybe, but maybe not as strong as the previous ones that we've seen, mainly because we're going to be in a saner world. It will only mean that people will actually have to earn, they will have to earn, work, and do productive jobs to actually be able to consume. We've been living in this Keynesian mentality world that debt, credit, and consumption is everything. But as the Austrians say, for every producer, there's a consumer. You have to produce in order to be able to consume. And people call Russia like a gas station. Yes, that might be so, but it's a gas station that has the goods. It's also a supermarket, I would say, that has the natural resources. And if you look at their debt to GDP, I mean, compared to the West, it's puny. Their public debt to GDP is less than 20%, as you see here. So they've been following a different path to the West. So now let's quickly look at the charts that I think are showing that are pointing to this move that I've just spoken about. And it's the Russian ruble versus the major currencies. I'm going to start with the British pound for no particular reason, even though I am in the UK. So here's the British pound versus the ruble. And it's actually going back to around the 08 crisis, 2008 and 9. And you can see that the ruble hasn't been doing well since then. The fact that this chart is sloping upwards means that the pound is getting more rubles, so the pound's becoming more valuable. I think it's a reflection of the debt-based system being on top of things, the financialization, fiat currency system. But look at what's happened now with what's transpired in the Ukraine. yes, I think the markets got it completely wrong. They thought all the sanctions, the withdrawal or freezing of Russian reserves, all the stuff they threw at Russia once Russia invaded the Ukraine, the market was wrong. They thought it was the end of the ruble. The Russians would lose the war, and they've been completely wrong. Because as you can see, that spike above 200 is completely reversed, and it's come back to actually drop below the long-term trend line. So that's, in my opinion, why this is pointing to a major rebalancing of the scales. And let's look at some other ones. So now we've got the US dollar. Same kind of scenario, as you can see. Yeah, that 80 level, you can see why it was important. That had been the major resistance in the dollar. We broke through that, went up to 155, it looks like, and now reversed completely, and we're even trading below the long-term trend line. I'm not trying to tell you what to do here in terms of trading. All I'm trying to tell you here is that I think a major shift is coming, and that's the other reason why everything is so topsy-turvy in all asset classes. And we've got the euro as well. Euro hasn't escaped. Same kind of very similar to the other two currencies. And then I've actually got the Chinese yuan. Yeah, because we think a lot of people, and even I did, that the Chinese yuan would lead the way in terms of shifting the power away from a single reserve currency, so to speak, like the petrodollar. But I think the Chinese, they followed the Western path a lot more, and this shows it here. The yuan as well. The ruble is quite strong against the yuan. It's broken the long-term trend line. So there you go. With that, let's quickly look at where the markets are this morning. It's 8:15 a.m. London time. We've got spot gold trading at 18.10. It's down about $2. Range has been 18.18 to 18.04. Silver's down 6 cents, 21.05. High's been 21.31. The low has been 20.95. A sip of my coffee, excuse me. The Dow future is hovering just around 32,000 exactly, is down 186 points, just over 0.5%. NASDAQ is down 1% at 12,258, and the S&P 500 index is back below 4,000 at 39.92, down 0.7%. The FTSE is down 50 points at 73.72, and the Euro Stoxx 50 is down 25 points at 36.77. To the currencies, sterling is down 0.25%, 122.28. The euro is unchanged, 104.10. The dollar is down 0.2 versus the yen at 128.98. And the dollar is up slightly against the Swiss franc at, just above par. Yeah, they're trading 1-to-1, the dollar and the Swissy. The dollar is up 0.25% versus the yuan at 6.82. What about the ruble? What's the ruble doing this morning? Well, we are trading at 63.50 in the ruble. The recent low has been 60, so I think that's the next level that will provide a bit of a floor for the dollar, but eventually that level will break too, in my opinion. Aussie dollar is down almost 2/3% at 68.98. Some might ask, how come the Aussie dollar is not doing better? It has a lot of commodities. Well, yes, it does, Australia, but it's been playing this massive credit bubble, real estate bubble game that we've been playing in the West. It's been massively inflating the system, and that's why I think the Aussie dollar hasn't done as well as the ruble. They're up to here in debt, the Australians. Dollar is up 0.5% versus the loonie or Canadian dollar, 129.62, and the Kiwi dollar is down 2/3% at 62.50. General commodities, WTI crude is down over 1% at 107.68. Brent, the same, down over 1% at 109.12. High-grade copper is down 2/3% at 4.15. U.S. nat gas is up 2% at 7.86. And to finish off, quick look at the 10-year yield. That's down 5 basis points at 2.88. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to this channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great start to the week. Take care. Bye.